We are seeing absolute panic and chaos in financial markets today. Some people are going to tell you it's the unwinding of global carry trade, specifically the Japanese yen. Others are going to tell you it's the latest jobs report and the labor market is breaking. But I'm here to tell you, take a deep breath. Everything is going to be just fine. Unemployment did continue to climb up to 4.3%, but is the labor market actually breaking? We're going to look at everything in that jobs report and what it means here in a minute. And remember, for months I've been saying Fed rate cuts will not come until unemployment goes up. So here you go. It's finally happening. This is a gift to all of you who wanted rate cuts. Already, mortgage rates closed last Friday at a 6.4% average, and it looks like today they're going to get even lower. The last time rates were consistently below this 6.4% number was back in January of 2023. And it was very short-lived then, and then for the rest of the year, rates went straight up all the way over 8%. So even rates down here at 6.4% or below is a huge gift. As you already know, we should have already passed the peak of home prices for the year, and we should also be seeing less and less new listings every week for the rest of the year. Inventory is still growing, though not as quickly as we need it to, but still much better than last year. We're covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties, as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is August 5th. Let's see what the data is telling us, and if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. First up is market news, and there is a lot going on here. As I'm filming this, the markets opened up very, very in the red today. So let's start with a deep breath. Remember, you have been through these type of panic sell events many times in your life already. And just remember and look at what was the end result of each of those panic sells. Some of you watching this have panic sold the bottom more than once, and others of you bought the panic instead. But either way, you've survived every time, and eventually things continued up. No market can go straight up forever, and your goal isn't to buy the bottom and sell the top. It's to buy relatively low and sell higher. So pull up your charts today, see if prices look relatively low to you, and if so, buy some and walk away. If history means anything, you'll be in profit in the not so distant future. And if it continues down, then you simply dollar cost average until it does go up. But you never panic sell. In fact, rarely ever will you get the opportunity to buy a big sustained market sell-off like this. It may only happen a few times in your lifetime, so don't waste this opportunity. You remember last year when the Silicon Valley Bank was collapsing and all the panic that came from that? It just came and went like nothing happened. Of course, you remember COVID and that big sell-off and how much panic there was? If you had been buying at that time instead of selling, it was a very easy way to double your money. But anyway, let's look at this jobs report. So the big number that everyone is talking about, 4.3% unemployment. First of all, that is historically a very low number. Just look at this chart. At 4.3%, we're right back to where we were in 2016, 2017. And if you'll remember, the world was not falling apart at that time. Not to mention, the economy is still creating jobs. We actually had an increase of 114,000 jobs created, and the labor force has grown by roughly 1.3 million since last year. So we're still creating jobs, we haven't had a single negative GDP print, and unemployment moved up, but to a historically low number. So let's zoom in and see if the jobs market is actually breaking and we actually need to panic. Starting with the jobless claims data. To have a traditional job loss recession where people are losing their jobs, we have negative GDP and all of that, it would start with this jobless claims number getting much higher, well over 300,000. And you can see we're still under 240,000. We're not even back up to where we were in June, July of 2023. In fact, we're not even as high as we were just a month ago. And this number comes out every Thursday morning. So if you're worried about a job loss recession, you're gonna see it starting right here, and you can look at this every week. But just know, if we really had an explosion of jobs being lost, this number would be shooting straight up, And for a real job loss recession, it would be over 300,000, and we're nowhere near that. Then we have the job openings data. This is a big one for the Fed because it tells them if the labor supply is balanced or not. So previously, they did not like it when job openings were way up at 12 million because they believed that would cause wage growth to go up. But now the job openings has fallen just to about 8 million, and in fact, it remains unchanged from last month. This seems to be an acceptable number to the Fed. And the job openings report includes data on both hires and quits, which are both now at pre-COVID levels. So the labor supply is pretty balanced. Then lastly, wage growth. It peaked in March of 2022 way up at 5.9%, and now it's down to just 3.6%. As long as we keep trending down towards 3%, I think this number is doing just fine. So in summary, is the labor market breaking? No, it's not. The goal of the Fed has been to soften the labor market without breaking it. And so far, that's exactly what's been happening. And before we move on, I wanted to mention, when the Fed cuts rates, even if it's a full 0.5%, mortgage rates might not move at all. Because the mortgage rate drops you're seeing today is the bond market trying to price in that future rate cut. In fact, it's totally possible that when the actual rate cut is announced, mortgage rates could actually go up. This happened many times on the way up when they were having rate hikes. Many times a big rate hike was announced and mortgage rates would actually come down a little bit. So I just want to remind you, nobody has any idea what's actually coming and what impact these things will actually have. If you try to time the market, more often than not, you're going to get it wrong. All you know for certain is today. So you have to make the best decision you can with what you know for certain today. And if you want to learn more about all of those things I just talked about, I made a video about it last week, and you can watch that here next. Okay, moving right along, starting with national housing inventory. This week, we had an increase of 6,482 homes for sale in the country, a bit smaller of an increase than we've been having, but we still have 40% more inventory than we did last year. So this gets us up to 683,728 homes available for sale in the country. A fun fact is that the same week last year, inventory was only at 489,000, so much better this year. For reference, the all-time inventory bottom in 2022, we only had 240,000 homes for sale, and the peak of last year, we had 570,000 homes for sale, and the same week in 2015, we had about 1.195 million homes for sale. So we're up more than double from the 2022 bottom, but still need to nearly double again to get to a normal market. But we're getting closer every week, which is great. Now let's look at new listings. No surprise this week. We're still firmly between 2022 and 2023's numbers. This week we had 67,085 new listings in the US. Long story short, to get back to a balanced market, we need more people listing their homes. We would need even more than we had in 2022, and so far we're lagging behind that. And lastly, as you can see very clearly on this chart, you can expect less and less new listings every single week. This is going to continue to trend down for the rest of the year, which means that even though inventory can continue up as days on market go up and less desirable properties sit, if you're a home buyer, you're going to have less and less new options to choose from every single week from here on out. So if you're wanting to be picky and passing on good homes, hoping that something better is going to come up later, the reality is you're just going to have less and less new and good options to choose from every single week. Okay, moving on to pending sales. You can see the weekly pending contracts data has just been slightly above 2023 for most of the year. In fact, we have about 4% more contracts right now than we did this time last year, which translates to about 15,000 more homes pending right now than last year. So that's 379,482 homes are under contract in the country. And then the last thing we cover nationally is the number of homes having a price decrease. Every year, it's normal for a third of homes to take a price cut before selling. Looking at the national chart this week, we're at 39% of homes having a price decrease. Last year, we got as high as 39.2. The year before, we got as high as 43.2. But it's normal for this number to be increasing this time of the year, and it can go up all the way into November. Okay, moving on to mortgage rates. Look how insane this drop-off is. And again, this is the market trying to price in the Fed's rate cut. They're probably over-exaggerating at this point. This will probably come back up some. And my prediction in that video I mentioned earlier was we're going to probably hang out around 6.4 to 6.6 for this first rate cut, and then we'll see from there. But you can see this chart is the last year, and we are well below anywhere that we've been in the last year. So this is very welcome news. And as I mentioned, if we look at the 10-year, it was looking like when we opened up this morning, rates were going to be a bit lower, but actually now that I'm making the video, they're up basically to where they closed. So still around that 6.4. We don't know by the time it prints what it'll be like. And I also want you to see, I marked out in that video all of these rate hikes. So you can see there was a big rate hike here, and mortgage rates came way down here. There was a big rate hike here, and mortgage rates came down to here. So I talk about it more in that video, but all this to say, the Fed cutting rates doesn't mean mortgage rates coming down, not necessarily at least. And you know what's crazy is our last rate hike was way back here in July of 23. So the Fed rate did not move one single bit, and look what happened to mortgage rates. Straight up, straight down, straight up, straight down. So all of this has nothing to do with the Fed hiking or cutting rates. This is just the bond market doing its thing. That's who's really setting the mortgage rates. So don't get too excited about the Fed cutting rates. I think it's mostly priced in already, at least this first one. But again, it's all in that video. Then regarding mortgage purchase applications, remember, this is us expecting what's going to happen 30 to 90 days from now. So the last 4 weeks, maybe 5 weeks, you could say we've been trending down, but that's not going to show up 30 to 90 days from now. What we're seeing today is actually these weeks where demand was going up. And you'll see that in the local data here when we get to it in a minute. But this week, from 1 week to the next, we had about a 1.5% drop in the number of people applying for mortgages. And there's really no reason to believe mortgage demand is going to grow significantly. Even with rates here, it may grow a little, but the real demand, as we've seen, is below 6%. And we saw that back in January of last year when rates got to 5.99%. There was a huge jump in prices from January to February, as well as home builders are still offering sub 6% mortgage rates, and they're the ones that are still selling just fine. So we know for sure demand is below 6%. So 6.4 is much better than we've been at, but that's not where the real demand is. So I wouldn't expect this number to grow until we get closer to or sub 6% rates. Okay, before we move on to the local market data, two things. One, if you don't want to go broke buying a house, I've made a course for you, which includes an updated version of my max affordability calculator. With this tool, you're going to input your actual spending habits straight from your bank account, and it's going to show you the exact number of how much you can allocate towards housing without going broke. It takes into account everything all the way down to your income tax bracket. It's better than anything you'll find online, and it's an absolute no-brainer for anyone who wants to have peace of mind about their purchase. And then number two, if you're still a few months out or a year out, but you just want to be fully educated and know everything there is to know about the home buying process here in Texas, I've made two courses for that. One is for new construction, one is for pre-owned homes. Yes, they are very different. You need to know very different things for each of them. So pick the one that most closely aligns with what you're thinking. And you can find links to all of those down in the description below. Okay, now we're moving on to the local market data, starting with the MLS data in Dallas County. In the last week, we had 587 listings. That's 68 more than last week. 360 closings. That's 62 more than last week. Again, remember, that purchase application data is now starting to show up in these sales numbers. So we had a big jump in sales this week. Of the homes that closed, 83 of them were immediate sales, meaning they contracted within the first week. And that's 14 more than last week. 316 went under contract. That's 7 less than last week. And in total, there are 2,186 homes either under contract or in pending status, and that's 51 less than last week. Now looking at Collin County, we had 435 new listings. That's just 1 more than last week. We had 328 closings. That's 47 more than last week. 83 were immediate sales. That's 22 more than last week. 204 went under contract. That's 20 more than last week. In total, there are 1,788 homes either under contract or pending in Collin County. That's 65 less than last week. Okay, let's move on to the Market Action Index. And if you're not familiar, it just takes all this data and puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Anything above a 30, we're asking how much of a seller's market are we in? And all we're really looking at here is, are things looking normal or are they looking weird? And they're looking totally normal. As you can see, median list price did have a drop this week, but you remember, week to week is not what we look at. We wait to see a trend, so this very well could reverse or it could continue down. It would make sense for the rest of the year, things to be cooling off, prices to be dropping, But I do not want you to be fooled by this. Great homes are still going to sell at top dollar. We are still a seller's market. What you're going to see for the rest of the year, the thing that brings those prices down are the homes that are not move-in ready. They're dated. Nobody wants to buy them. They're going to continue sitting on the market, making days on market go up and having price decreases. That's why you see the prices go down. So there's less demand, so those houses are going to sit longer and drop their prices until they find a buyer. But for great houses, they are still going to sell at top dollar. So if you're trying to buy a very nice house and you think waiting until later in the year is going to get you a better deal, it's not if you're looking for a great house. I do not want you to be fooled by these numbers. Okay, so very normal. Price may have started to drop. That's what should be happening this time of the year. Median days on market remains at 49 for the last few weeks, but average is starting to climb again. Number of homes having price decreases, another small increase this week. Inventory, this is the good news, is continuing to climb from 715 to 770 this week. And the market action index, of course, continuing to cool off. So again, everything just looks totally normal. The market should be cooling off for the rest of the year. Let's look at Collin County. Collin County, remember Dallas was a 40, so at a 37, Collin County is still a slight seller's advantage all the way until it gets down to 30, but it's definitely been cooling off faster than Dallas all year. Their median list price this week as well had an obvious drop, same as Dallas, but again, that's just 1 week data. It should be trending down, but don't panic over a 1 week sharp drop. Their average days on market has been pretty steady around 63, 64 since the end of July, middle of July. Median days on market has remained at a 42. Number of homes having a price decrease over here is actually slightly less than where it was at the end of July, so it may have stalled out for the year. But remember, it should be going up until November. Inventory still going up nicely, a couple hundred homes. And of course, the market action index will continue to decline. So once again, everything is looking normal here. This is just our quick glance. How's the market? We're still at a slight seller's advantage in Collin County. Now let's move on. First, I wanted to show you the pending data. This is something I don't know if I'm going to show every week, but what I wanted to show is in Dallas County, we actually have more pending sales right now than we did in either 22 or 23. That's pretty crazy, especially since you just saw like how low of demand we have in the number of people applying for mortgages. We actually have more pending sales this year. And then Collin County, of course, they have so much new construction and it's such a fast growing market. It's the number 2 fastest growing county in the entire country. So it's not surprising that their pending is up, but their pendings are actually going up. So that is a bit surprising. Okay, but now we're moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties, and these are ranked using that same market action index number. Remember, 30 or below is a buyer's market. So coming in at the number 1 hottest city remains Carrollton, Texas, although you can see it's trying to cool off just like the rest of the market, but it remains at number 1, and then Louisville heats up back to number 2. It lost that spot to Ferris last week, so Louisville and Ferris switch places for number 2 and 3. Lancaster heats up 2, Duncanville heats up 3, Plano cools off 2, Garland heats up 2, Richardson cools off 1, Grapevine heats up 1, and Coppell has a huge drop of 5 spots from number 5 all the way down to number 10 week to week. Then we like to zoom in and look at specific zip codes. The absolute hottest is Carrollton 75007, that's a 62.2, followed by Dallas 75244, which looks to be on the climb. Then Louisville 75067, Hutchins 75141, Carrollton 75010, Plano 75093, Plano 75075, Garland 75044, Grand Prairie 75050, and Dallas 75249. So if you have a house in one of these zip codes, congratulations, you can sell for top dollar. Now let's look at the same thing but the coolest markets. Sunnyvale cools off 2 spots to become the absolute hottest city this week. For the first time, it's all the way down to a 27.41, and that makes Van Alstyne and Leonard heat up 1 to number 2 and 3. Prosper remains at number 4, but if you'll remember last week, it was a buyer's market. It dropped just under 30. So this week it's back to a seller's market, just hanging on by a thread at a 30.5. Then Rockwall and Levon remain. Blue Ridge cools off 1. Salina heats up 1. Anna remains at number 9. And Whitewright jumps on at number 10, replacing Royce City for the hottest city on the coolest cities list. Then looking at specific zip codes, the absolute coolest is Sunnyvale 75182, Van Alstyne 75495, Leonard 75452, Prosper 75078, Dallas 75205, Dallas 75209, Rockwall 75087, Mesquite 75181, Dallas 75204, and Dallas 75211. So that's it for this week. Make sure to not panic. And as always, if you're looking to buy or sell in the Dallas area, call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.